A great number, 9.6% in comparison to 6.5% the previous month. So clearly mining production starting to kick off, and we had even gold production doing relatively well, 2.1% year on year.
Yeah, and if you look at the month-on-month number for gold, it was an increase of 2.5%. I don't think we've seen that for quite some time on the gold front. So looking a lot more positive. And the big movers were your platinum. Platinum group metals did very good over the month. Nickel did very good. Let's have a look here. Coal did extremely good, which really makes sense.
Floods in Australia.
Well, this is now for November last year, so I don't think it would have impacted so much on what's happening.
So essentially, it's just the pure underlying demand that we've been seeing from
I think so. So you still got a big China impact here, and if you look at the type of commodities that performed well, iron ore, chrome, copper, nickel, that is all demand coming through from China. So a very impressive performance, and perhaps boding quite well anyway for the fourth quarter of last year and into the first half of this year.
And then, as I mentioned, I mean, the floods in Australia, we've got increased demand coming through from iron ore as well. I mean, looking at the likes of Rio, which also came out with production numbers in today's session. But overall, the commodity space looking relatively well, very good. We've got a very strong currency, unfortunately, at this point in time, so perhaps impacting the mining companies, but commodity prices are also doing very well.
Yes, I think it is a little bit of a situation where what the rand really does is it affects profitability. So it squeezes the margin and places more pressure on you to control the cost. But all of that would be a lot worse if you didn't sell any volume. And what this is telling us, at least the demand, the orders are coming through, and that presents, overall a better picture.
Let's touch on the MPC, and of course we're set to hear on the rate decision later on this week. It is said that we won't be seeing a move this time around. We had a rate cut in November, bringing the repo rate down to 5.5%. And then we've got other things filtering to the surface now with inflation concerns in Europe. China's got the same problem, and looking at the most recent UK CPI number that was released today, 3.7% for the month of December. So a scary scenario that could play out on the inflation front.
No, absolutely. I think inflation, the picture on the inflation front is not nearly as benign as it was 2009, 2010. And that does change the picture for them, and it does change the considerations going into this MPC meeting. Like we all know, we've had horrible weather, and it's not only in South Africa, it's across the world. It started with droughts in Russia, which affected the wheat price. Then you now have droughts in Argentina as well. You've got floods in Indonesia, you've got floods in Australia, you've got floods in South Africa. So agricultural production has been completely disrupted. We still got very high wheat prices. Maize prices are starting to climb higher. Literally, you're seeing it coming through, and would be in fruit and vegetable production as well, where crops are literally just rotting in the fields. So food inflation is becoming a big concern. I mean, we've had riots in parts of Africa that have toppled governments, as you know. So it's been very aggressive on that front. That is something they'll have to look at. They'll have to worry about that, whether they want to or not. Oil prices at very high levels. They're between the $90 and the $100 a barrel. All other commodity prices very high. Coal prices shot up as a result of what's happened in Australia. So we have a completely different picture on the inflation front.
Does this mean you're going to be changing your inflation outlook, Nicky?
We have actually. We've got inflation now will probably end, the end of last year would have ended at around 3.7%. We've got it edging up now still as a result of the base effect, staying quite contained up until about April, sort of edging up to around 4% and thereabouts, and then we've got it escalating quite rapidly.
And then breaching the 6% target this year?
No, we've got it just beneath at 5.6%. So it's not an overall, it's not a catastrophic picture. You're not going over 6%, soaring towards 7%. But it is a very clear upward trajectory, and it's something that they will have to look at. Plus the risks on the food inflation side is quite significant. In terms of oil prices are quite significant. And the key factor containing all of this is the rand. So the rand's also slightly weaker since the beginning of this year as you compare to where it was last year. So your factors containing it is the rand. And you have to say the risk of a correction in the value of the currency increases the longer it remains at these very clear...
And this at a time where we've had the Reserve Bank saying that it's going to be accumulating more reserves, it's going to try and be more flexible in terms of its policy with regards to the currency. Do you think they're going to be holding back now, given the fact that the inflation outlook has changed so dramatically?
Yes, I think they're going to be more cautious. They're not going to start hiking rates, because on the other side of the equation, you still have the economy. It's still very much an uneven picture there. On the consumption side, it's starting to look a lot better. You look at some of the retailers reporting, it's a far more encouraging picture. Anecdotal evidence suggests that we had a fairly decent festive season. There was a last-minute rush that pushed up the numbers. So the consumer is starting to spend. So that doesn't look too bad at all. That looks quite encouraging for a recovery. Not a surprise, though, given that you've got interest rate at over 30% of over 30-year low.
Yeah.
You've got rising income as a result of some generous wage increases. So that's not a surprise. But on the production side, things are still a little bit up in the air.
Just very quickly,
Yes.
are we going to see another rate cut this year?
No, we think hold.
Okay, fantastic. Thank you so much, Nicky, for your time. Much appreciated.